After years of trading ICT concepts, I've learned one thing the hard way, and it's that simplicity wins. The more tools, indicators, and models you're trying to pile on, the harder it becomes to stay consistent. If you're trying to play both sides of the market, chasing every single setup, you're not trading with clarity, you're gambling with confusion. So in this video, I'm going to show you an intraday scalp model that is built on the two most powerful ICT concepts, which is liquidity and fair value gaps. This setup is clean, repeatable, and most importantly, it actually works. I'm going to break down the framework behind why fair value gaps are so strong, especially when paired with liquidity. Then I'm going to walk you through 5 trades you could have caught last week using this exact model. Let's get right into it. Before I show you guys 5 trades you could have caught this week using this exact strategy, I want to get into the steps you need to follow in order to execute this system properly. And step 1, you need to identify a fair value gap on the 15-minute. And as you guys can see, there is 2 scenarios. There's the bullish and the bearish scenario. Now you're probably asking, what is a fair value gap? A bullish fair value gap is a 3 consecutive bullish candle pattern where the up wick of the first candle doesn't touch the down wick of the third candle. And what does that create? A fair value gap. And what is this fair value gap telling us? It's telling us who's in control of the market. If we create bullish fair value gaps, it means that the buyers are the one being aggressive and are controlling the market. Now let's get into the bearish scenario, which is a bearish fair value gap on the 15-minute chart. What does that mean? It means that this is a 3 candle pattern where the down wick of the first candle doesn't touch the up wick of the third candle. And what does that mean? It means that the sellers are the one controlling the market and they're being aggressive. Now that you know your bias, the step 2 is to wait for price to enter this 15-minute fair value gap aggressively by creating a fair value gap on either the 1, 2, 3, or 5-minute chart in the opposite direction of the 15-minute gap. This is pretty simple. Let's use the bullish scenario. You want to wait for price to enter this 15-minute fair value gap with aggression. And what does aggression means? It means that you're creating a fair value gap in the opposite direction on either the 1, 2, 3, or 5-minute chart. So right here, this is where you enter this 15-minute bullish fair value gap. So you want to create a bearish fair value gap, which is going to signal that the sellers are being aggressive when you enter the bullish zone. Now let's take a look at the bearish scenario. It's pretty simple. Again, you want to wait for price to enter this 15-minute bearish fair value gap by creating a bullish fair value gap on either the 1, 2, 3, or 5-minute chart, and that will signal that you entered aggressively inside your higher time frame zone and the buyers are located inside this fair value gap right here. Now you're probably wondering, why do we need to wait for price to enter this 15-minute zone aggressively by creating a fair value gap? And the answer is fair value gaps tells you the story and the order flow. Let's use the bullish scenario. On the 15-minute chart, we know that there's a lot of buyers located between this candle's high, this candle's low on the 15-minute chart. But when we scale down to a 1, 2, 3, or 5-minute chart, if you enter this zone and you have a bearish fair value gap, it tells you the exact same thing. It tells you that there's a lot of sellers located between this candle's high, this candle's low right here. So if you just entered a zone where you know a lot of passive buyers will be interested in defending their position and you know where sellers are located, then you can say to yourself, if we are truly bearish, those sellers located between this fair value gap should hold price in order to create new lows. But if the buyers are strong enough, they will squeeze all those sellers located inside this gap, so you will have a potential move back to the upside. Same thing for the bearish scenario. On the 15-minute chart, you know that the sellers are the one controlling the market and are located between this candle's low, this candle's high. So now, if you tap a zone where you expect sellers to defend their position to continue the trend, then if you know where lower time frame buyers are located, then you can wait for them to get squeezed so you have a really good confirmation to play a reversal. So right here, if we enter this bearish 15-minute fair value gap aggressively by creating a bullish fair value gap on either the 1, 2, 3, or 5-minute chart, then if we are truly bullish, those buyers on the lower time frame should hold right here to create new highs. Okay, should hold the lower time frame fair value gap to create new highs. But if we're going to be bearish and the sellers defended the position inside the higher time frame zone, we will squeeze all the buyers right here, which will signal that there is a potential reversal opportunity. That leads us to step number 3, which is you want to wait for the lower time frame fair value gap to get disrespected so you have an inversion fair value gap. And as soon as you have that lower time frame confirmation, this is where you want to enter for the reversal play with a 1-to-1 risk to reward ratio. Use the bullish scenario. Right here, you entered the 15-minute zone, created a lower time frame fair value gap in the opposite direction. You will wait for price to disrespect that lower time frame fair value gap, so you play the reversal for a 1-to-1. Same thing on the bearish side. You enter the bearish fair value gap on the higher time frame, then you wait for the lower time frame bullish fair value gap to be disrespected, so you play reversal for a 1-to-1 risk to reward. Now let's get into real life examples of this strategy working, and the example number 1 happened on June 9th, 2025. Right here to my left, I can locate a bearish fair value gap, and inside this bearish fair value gap, I know that there's a lot of passive sellers waiting to get filled. So when I can locate this fair value gap, I want to scale down to the 1, 2, 3, or 5-minute chart to see what is going to be the reaction when we enter this fair value gap. So this is already my step 1. I marked out my fair value gap on the 15-minute chart. I'm going to wait for this 15-minute bearish fair value gap to get filled and see is there any aggression by the buyers when we enter this 15-minute zone. So right here, we entered this 15-minute bearish fair value gap, so we know there's a lot of sellers right here. But on the lower time frame, it tells me that the buyers are the one being aggressive. So right here, I can locate a fair value gap on the 3-minute chart. And what is this fair value gap telling me? On the lower time frame, it tells me that the buyers are located between this candle's high, this candle's low right here. So if we are truly bullish, we should respect the zone to create new highs. But if we're bearish and the sellers defended their position well enough, then we will have a potential reversal if we can squeeze all those buyers right here by seeing an inversion fair value gap. So this is already my step 2 checked right here, and I'm waiting for price to inverse this 3-minute gap, so I have my confirmation of step 3. I'm going to wait for this fair value gap to get disrespected, so we have the step 3 checked. And right here on this candle, this is where the aggressive sellers stepped in and we disrespected that bullish fair value gap, so I know the sellers are the one controlling the market. This is exactly the moment you want to go short, stop loss right above this high, and you want to target the internal fair value gap for a 1-to-1 risk to reward ratio. Let's see what it does. And as you guys can see, in a few minutes, you hit your target. You guys should understand the framework pretty well by now. Let me get into the second example, which happened on Tuesday, June 10th, 2025. In the market open, you created a 15-minute bullish fair value gap, which is telling you that the buyers are controlling the higher time frame. Then you want to scale down to the 1, 2, 3, or 5-minute chart to see what is the reaction when you entered this gap. Was there any aggression by the sellers? So this is exactly what I'm going to wait for. Right here, we tap this 15-minute zone. Let's see what's happening. And right here, this is exactly the scenario that we want. We swept an internal low inside this 15-minute zone, and we created a bearish fair value gap on the way down. Okay, so a fair value gap on the 1-minute chart, which is in the opposite direction of our bias, which is a bullish bias. So then what am I going to wait for? I'm going to wait for price to disrespect this fair value gap so I can take a long play, a reversal play for a 1-to-1 risk to reward. So this is my first block checks. So this is the step 1 checked right here, 15-minute bullish fair value gap. Step 2 checked right here. I'm going to wait for step 3 to be checked to get into this long. And right here, this is my step 3. So I want to get long, stop loss right below this low, and I want to aim for a 1-to-1 risk to reward ratio. So right here on this candle, this is my step 3 checked. Now let's see what it does. So this is where you would go long. As you guys can see, in a few minutes, you hit your target. Now let's take a look at the third example we have for today, which happened on Wednesday, June 11th, 2025. Right here at around 9 a.m., you created a fair value gap right here on the 15-minute chart. So you know the buyers will most likely try to defend their position. Now I'm going to scale down to the lower time frames and see what is happening when we're entering this gap. I'm going to wait for this fair value gap to get tapped, and I'm on the 3-minute chart right here. And as you guys can see, when we entered this 15-minute zone, we entered aggressively by creating a bearish fair value gap on the 3-minute chart. What is this fair value gap telling me? Sellers are located between this candle's low, this candle's high. So if we're truly bearish, we should respect the zone to create new lows. Okay, so right now I'm gonna wait for price to disrespect that zone so we can see an order flow flip on the lower time frame, and this is where I would go long. Right here, as soon as we close above, I don't want to engage too high inside this range right here, so I will wait for price to pull back towards the area where we inversed this fair value gap, and then I will go along for a 1-to-1 risk to reward. Let's see what it does. So this is where I would get filled. And as you guys can see, in a few minutes, you would hit your target. Let's take a look at our fourth example of the week, which happened on Thursday, June 12th, 2025. So right here, as you guys can see, we created a bullish 15-minute fair value gap. So now I'm gonna wait for price to enter this 15-minute bullish fair value gap and see is there any lower time frame confirmation to go and play the reversal. So right here, I can mark out this small box right here, this blue box, which is my bullish fair value gap on the 15-minute chart. And I'm gonna wait for price to enter the zone. And as soon as we enter the zone, what you guys can see? You guys can see that we entered the zone aggressively. I can locate where are my sellers on the lower time frame, and they're located inside this 1-minute fair value gap. They're located between this candle's low right here and this candle's high. So now if we disrespect this fair value gap on the lower time frame, then I know I have a reversal play for a 1-to-1. So now I'm gonna wait. And right here, this is where I disrespect this fair value gap. So I will go long, stop loss right below this low, and I will go for a 1-to-1 risk to reward play to the upside. Let's see what it does here. And in 1 minute, literally 1 minute, you hit your target. Let's take a look at the fifth and final example of the week, which happened on Friday, June 13th, 2025. So as you guys can see right here, to the left, there is a 15-minute bullish fair value gap. Okay, this fair value gap got mitigated mostly, but there is still a small portion of the gap that is not filled yet. So for me to recycle this fair value gap, I would need to sweep the lowest low inside of this fair value gap for me to consider playing a long. Okay, so right now I'm gonna mark out this small box right here, and I will scale down to the 1-minute chart and see what is gonna be the reaction when we're gonna enter this 15-minute zone. So right here, this is where we entered this 15-minute bullish fair value gap, where I expect buyers to defend their position to keep going up. Okay, so right here, I have created two signs of aggression by the sellers. Okay, I have a sign of aggression created by this fair value gap right here and right here. So I know sellers are located between those two fair value gaps. So if I disrespect those fair value gaps right here, I know that I have pretty good chances of seeing a reversal back for a 1-to-1 risk to reward play. Right here on this candle, this is where I get the confirmation. I would put my stop loss right below this low, and I would go for a 1-to-1 risk to reward play back to the upside. Let's see what it does here. As you guys can see, in a few minutes, you hit your target again. If you want to start trading this strategy as soon as possible, I suggest you guys go with Tradeify and use the code AMAS for the biggest deals. They have straight to SIM funded accounts, which means that you don't have to pass any evaluations. You're immediately funded, and you can also have access to growth and advanced accounts for a 30% discount using my code right now. So make sure you guys like and subscribe and use my code if you want to support me. Thank you guys so much. Hopefully you guys enjoyed this video. See you guys in the next one. Peace out.